In today's video, I'm going to show you a Fibonacci retracement plus extension strategy that is highly profitable in Forex if done correctly. I'm going to show you start to finish how to set up these trades, how to find them on your own. And again, the cool thing is this is something that we see happen again and again in Forex. Let's go.
So what we're going to do here is we're looking at the pound dollar. And before I start with any of this sort of stuff, the first thing I want to say is that fibs, the way I use them with the trend. I'm looking for trend following opportunities. And so I've got a couple moving averages that I want to show you real quick. Before we jump into a whole bunch of examples, I'm going to apply the 50 and the 100 simple moving average here. Very, very simple stuff. We're looking at the 1 hour chart. Nothing crazy, but whatever we talk about, this is something that you can use on many different time frames. It's basically just Fibonacci retracement stuff. And if you're not sure with what Fibonacci really is, it's basically it's a sequence or a sequence of numbers, mathematical thing. I'm not a big mathematician person, but I know that it is something that exists very heavily in nature, and it actually arguably exists in markets to a degree. So what we're going to do here is I'm going to talk about how to use this tool. Again, when we drag it across the screen, it creates all these levels. And of course, if you're new to that, we'll talk a little bit about that. And then we're going to talk about the Fibonacci Extension tool, which is even more confusing. But don't worry, in this video, we'll go start to finish and talk all about these two tools and how we can use them to find excellent trading opportunities. So let's say we're looking at the chart here and we say, hey, you know what? This thing isn't an upward trend. How do we tell? Again, just a simple moving average concept, the blue and the orange. Basically, when these are both in the same direction, that's telling us we're in a uptrend. When these things are in a downwards direction, we'll call that a downtrend. But we'll come back to that later. Now, here's the thing. Let's say we're in an uptrend. Let's say that this market is bullish. What we're going to be looking for is buying opportunities. And the first thing we're going to do is we're going to start looking for Fibonacci retracements. Okay, so now a Fib retracement comes in when we have a market that is trending and then starts to pull back. Now, of course, you don't know when you're, up here that this is going to be the top. But let's, after a little bit, let's say that you are here, okay? You are here, okay? And you're looking at the market and you're saying, okay, this has formed a topping point. At least it seems like that in the short term. So let me go ahead and draw from the low of this move to the top of this move. And again, we're going to be looking for opportunities for pullbacks. Now, what we're going to be doing here, let me zoom in a little bit so we can see price a bit better. And I'm going to go ahead and move the moving averages off the screen. We now know that the market is in an upward trend. That's what we're looking for. We're looking for buys. Okay, so this is where the levels come in. Now, again, the Fib retracements, they give you three major component levels. Now, there are more that you could potentially look at, but I like to look at the major three. So let me extend this out just a little bit so you can see these levels. So we've gone ahead and drawn the Fib retracement from here to here. And what I want you guys to see is that we've got three levels here, the 38.2, the 50%, and the 61.8. And the thing that, very new traders, the first question they're going to have is, well, which level of these is the support level that I want to buy? Because these are three potential support levels. We'll put question marks next to them because we don't know if these levels are going to be major levels of support. There are some things, however, that we can look to do to try and find levels of support with this. So now that we've got our Fib retracement tools, we can also try and line up some things with just basic support and resistance, right? For example, you've got a supportive level here. Arguably, you've got a bit of support here, looking left on the screen. And, arguably, you've also got support here. So a couple major levels of support noted. And what I want you to kind of look at for when we're looking at the Fib retracement tool is by itself, it's not a magical tool. There is no magical technical analysis tool that's going to, make you rich or anything super quickly. But this idea is going to help come up with some thoughts for potential trade setups. Again, it's giving us three question mark levels where we could find buying support in what we would consider a upward trend according to our analysis that we did earlier with the moving averages. So now that we've got that on the screen, we've got a potential pullback zone to pay attention to. And what I want you to look at right here is this candle right here. This candle, this little green funky looking candle that, if we were to zoom this out on a screen, it basically looks like this, right? It's a weird looking candle. This is what we would call an indecision or kind of a doji candle. There's all sorts of different names for candlestick patterns, but what I want you to kind of get out of this is that we tried to go higher, we tried to go lower, we basically ended up breaking even. And so what that tells us is that neither the sellers or buyers are in so much control, but remember, what context are we in? we're in an upward trend and sellers are losing steam here, that's a potential for buy side continuation. Okay, so that's the first half. Now we have a potential entry. We've got a couple things going for us. Let's recap where we're at with this idea that we're taking. So we've got the trend to the upside, so that's one. We got the trend in our favor. Number two is you've got a supportive level here. We like that for potential, you know, there seems to be historically some buying here. And then finally, we have this level here. That gives us three confluence or confirmations for a potential buy trade. Now, let's just say that we take a look at this and we decide, okay, there's our long setup. And let's go ahead and put a stop below what we just marked as support. Again, I know I'm doing this in hindsight, by the way. I know that this is, you know, a cookie cutter example, but we're just kind of concept speaking here. We're talking about ideas and how we could potentially look for some of this and some of the cool components that we'll recognize here. Once I get to this extension stuff, I'm telling you, man, it is really, really cool. Some of the ways this market stuff kind of plays out again and again. So the market pulls back. We get a retracement, we get an indecision candle, and let's say we take the long. Now, the question is, where are we taking profit? A lot of new traders, what they'll do is they'll say, hey, you know what? We've got some structure here. We could potentially take profits at the previous high. And that's a very logical and normal place to be with your trading. But Fibonacci extensions, they are the next component of this video. Again, the first half of this, we've talked about supportive levels. We've talked about, you know, using the fib retracements for possible buying confirmations. But again, the first reaction for a lot of traders is, okay, I'll take profits here and I'll take profits here and I'll be done. But remember that a trend is, what is it doing? It's creating higher highs, right? If it's trending higher, if it's trending lower, it's creating lower lows. We are looking for, in a true trend following fashion, for this market to trend beyond this previous high. So how could we use a tool to help us find a potential extension? I'm glad that you asked. What we're going to do now is we're going to talk about the Fibonacci extension, which is this tool right here. So the trend-based fib extension here on TradingView. If we get going on this, I want to show you something really, really cool. So if we come down into this level here, what did I just do? Let me recap this with you. So now let's say that we are here with this trend. So remember, we talked about using the fib extensions. We used the fib retracements here. So this was our first step to find the entry. Step one is finding the entry. And let's assume that we get this trade, we're looking good, and we're saying, where do I go with this? Where do I, you know, I've got my stop loss idea figured out. Let's say I want to risk a certain amount of pips to the downside if price falls through the floor, falls through support. Yeah, I'm out of there. But where do we put this target? This is where the fib extensions go. So now let's say that we're here. Step two is now the exit. You know, where are we going with this? Let's assume that we found a bottom and draw a fib extension. So let's take the retracement off to kind of reduce some of the clutter here for a second. Let's start fresh. Let's say we've got the entry. We're into the trade and things are going well. Now we need to determine, again, the idea of a Fibonacci extension. We're looking, where are we going with this? And you'll notice that similar to the way that this created pullback levels, right? Our retracement created pullback levels for us to look for entries. The fib extension is going to create target levels. And there are different ways to approach this, but let's look at this. Let's look at some of the levels. We can draw this out and look at what we find. It's really quite amazing the way that this works out sometimes in markets. And again, I am cherry picking, so please bear with me. I'm showing you an example that worked beautifully because it's a good example of what sometimes the market does. And again, we see these patterns, even though I'm cherry picking, they do happen surprisingly more often you would think. Okay, so price pulls back, we get the buy, we're in the trade, and you know, many traders are going to probably look to take profits here. But look what the Fibonacci extension told us. The Fibonacci extension we drew from low to high to the pullback low. Okay, so again, we drew from the low, we dragged it here, so A to B, B to C, right? So we'll go A, B, C. And C, we're looking for confirmation that that's the bottom of the pullback. You can't really draw this if you're just assuming, oh, this is definitely the pullback, right? You kind of have to see confirmation a little bit later, you know, looking back, say, oh, yep, that's the bottom, that we found a bottoming point there. Okay, so we got our ABC, and look at this, you guys. You've got a 100% extension, and you've got a 1.618 extension. And what we are seeing here is we are seeing the levels created by the Fibonacci extension tool. So now we've got the entry, we've got the, the previous high, but look at this. This move, let's measure this out. This move here is approximately the same as this move here. Look at this, how that lined up perfectly. It's a 100% continuation. This distance, we are saying with the Fibonacci extension tool, we're saying, okay, well, if this trend continues, we could realistically, logically expect, if this trend is going to continue, that we could see a breakout of 100% of this move here. Remember, this is our impulsive move. So we measured an impulsive move, we got the corrective move, and now we're assuming the next impulsive move could last us the same distance as the previous time. This is what we're doing with pattern recognition. We're trying to spot this. I know it's getting a little bit complex, but bear with me. We also have one more level to speak about, and this kind of gets crazy. So let's assume we went for a 100% extension. That's a higher high. That's a continuation of the trend. Okay, so we've got the Fibonacci extension, and if we targeted 100%, that's awesome. We made a great risk to reward. In this case, this would have been about a 4-to-1 risk to reward, meaning if you risked $100, in this case, you would have made $400. So that's a great spot to be in. But check this out. What if we had gone for the full 1.618? We literally came all the way up to this level. We stopped on a dime and pulled back. It's amazing how this is happening in the markets. It really does happen more often than you think. And in this case, we got a 6-to-1, 6.44-to-1. That's an excellent risk to reward. And all we did was we bought a pullback and we anticipated potential extension levels using the fib extensions and the fib retracements. So again, let's recap. We use the fib retracement for entries. We use the fib extensions for targets. And so again, it happens a lot. So let's clear and let's look at what happens next. So we got this move, things are going, we're chugging along, things are beautiful, but then we reach that second target level and look what happens. Price pulls back and it fails. So here's what I want you to see next. And this is so crazy. So let's say that you're looking at this and you're saying, oh, okay, now remember, we need to establish the trend. Going back to the original, we need to establish the trend. At this point, we have now seen the flip. We are in a downward structure on this 1 hour chart. So now what do? We rinse and repeat the process. And this is just the amazing component of fib extensions. Watch this. So we get the fib retracement tool out. We draw from this new impulsive move, right? We draw it up. Of course, you're I know I'm cherry picking. So again, maybe I would have waited for the 61.8 and I would have missed this trade, but let's just assume we're really good at this stuff for now. And let's say you've got a supportive level here. And let's say you caught the sell. Let's say you caught the sell trade right around here and you say, okay, bam, we're in. Put a stop above structure, very logical spot for it to go. Again, if this trend to the downside is now going to continue, just watch this, you guys. This is amazing. So now repeat the process. We've got the entry. We've got a beautiful entry point on a pullback and a downward trend. The market has flipped sides. We are now in a downward trend. Where does the target go? Well, remember, we do the fib retracement stuff when price is pulling back and we get the entry. Once we've seen the entry starting to work, that's where we get the fib extension tool out. And watch this. This is so cool. So we'll go here, swing high to swing low. So the impulsive move, and we drag our level right on here. And look at this. So let me just drag that right there. Look at what happens. Is this not crazy to you guys that this happens twice in a row? Look at this. So again, we get the drop all the way down to the 1.618 off of this move. So our pullback was used with a fib retracement. Bam. Pullback, continuation, all the way down to the 1.618. This is crazy. So we get all the way down there. And then what do? We just continue on with the story. It's amazing. So you get these concepts where the trend flips. And in this case, you had a 7.5 risk to reward. Meaning if you risked $100, You made $750 off of that move. That's excellent, right? And again, I know it looks a little bit messy. The screen is a little bit confusing, but once you get going with these things and you practice the stuff a little bit, it's not so confusing anymore. Again, we used recap. We used the retracement tool for looking for entries, and then we used the extension tool, went from the impulsive move, corrective move. We spotted the top of the corrective move, right? A, B, C, D, right? This is amazing how the markets, they move in these cycles. And if you're able to spot them, there's some excellent risk to reward trades. Now, of course, it's not going to work out like this all the time. I'm showing you good examples on YouTube because it's more illustrative of what we're actually looking for. A lot of times you're going to get something where, you stop out and then the market does some crazy stuff and it doesn't do this sort of stuff. But when it works, you can see that the risk to reward on some of these trades is incredible. So that's the whole point, using fib retracements to fib extensions, using the, again, retracement tool for entries, extension tool for targets. So that's going to be everything for today's video. If you enjoyed it, make sure to thumbs it up down below, subscribe if you're new, and thanks for watching. We'll see you next time.